Hey YouTube, this is Zach with Achilles Financial, and today I have an incredibly interesting company that we're going to be covering. Today we're going to be looking at VGAC, which is the Virgin Group Acquisition Corp, and they are a SPAC which is going to be taking 23andMe, a genetic testing company, public. And this group, as well as the overall transaction, is really going to be backed by billionaire investor Richard Branson. So we're definitely going to be watching this. I think that this is super interesting, but I have done a lot of the due diligence. I've been looking at some of the investor reports. I've been looking at some of the numbers. I've been looking at some of Richard Branson's other ventures, which I know is the super popular SPCE or Virgin Galactic company, and how well they've been doing since they went public via a SPAC. So I think there's a lot of interesting things with this company, and I am interested to see, again, kind of how they perform. So this is the ticker symbol. Again, you've got that VGAC that is going here. At the time of the merger, which they have not set a merger date, it's going to be in either Q2 or Q3 of 2021. That date has not been finalized, but that is going to be happening this calendar year, and the ticker symbol is going to go from VGAC to ME or me. So let's dive into what 23andMe does as a company and how well they perform. So this is the 23andMe company website. You can see here. So what do they do? What does this company do for business? So I learned a whole new side just kind of learning about this company. I was very familiar with the initial process, but there's also a lot on the back side. So what this company does is they are heavily involved in the data collection of their users. And essentially what they're doing is they are testing DNA from their users. So you've got this kit request, you send them your data, so it takes a DNA sample. And then what you're doing is you are essentially providing them data so that they're capable of essentially providing you with genealogy research, where you're from in terms of the entire world, as well as just different ideas and information about who you are as a person and your genetic code. This can even include things like if you have genetic mutations in your system, or at least in your family history. So you can see it's pretty easy to go through the process. Essentially, all you're doing is spitting in a tube and sending that information to them. So the big thing here is, again, you kind of get this genetic report. This thing is, again, I thought that the fundamental idea behind this company is that you would be getting basically your genealogy back. So who were your parents, your family tree, kind of like a ancestry.com type of vibe. But they are actually, I think personally, their biggest value is that they are building a massive database of genetics. So they have entire populations. They've got millions and millions and millions of people that are freely providing their data. And again, they're talking about the privacy is their priority because there are a lot of legal repercussions. For example, if your insurers knew that you had pre-existing conditions or that you had conditions in your family history. So I think that capability right here of the genetic reports is their biggest value add, because what they're doing is they're collecting a massive sample size that is unheard of in common pharma or drug development. So what they're going to be able to do in the future is to be able to utilize a lot of that drug development capabilities here. So again, this is just a cool company, because I think that is where all of their capabilities are really going to reside. As always, I want to talk about the pricing, because there are some crazy things in the investor presentation that is pretty surprising to me. The thing that I want to look at here is, as you can see, you're covering a lot of data in this various information. You can see the ancestry information right here. So pretty much either of the first two options is going to give you a lot of that initial information. The other stuff here from a health perspective is really going to talk about, again, you, your family, and overall I think that this is beneficial. But again, for you as a consumer, it's beneficial. For 23andMe as a business, it is incredible that they're tracking all of this information. Again, you can even see some of the trait reports of essentially, like, look how in depth: male bald spot, sweet versus salty, or is a unibrow normal in your family history? So just a lot of information in here. The big thing, as we talk about all the time, if they are able to get in this recurring component of $29 per year, I think that is huge. So the reason I'm showing all of this information that you see right here is because we want to really talk about how this company is not profitable, despite the fact that, and this is what's blowing my mind, their target profit margin, or their gross margin right now, is between 40 and 50%. So this is huge because, again, if you get this option right here, $40 are scot-free, not covered by expenses, and they're still not profitable. So let's talk about the investor presentation, what this SPAC is going to do for them, and at the end of the day, is this a good investment? So let's dive over to the company investment page. The way that you can get that information, so I went back here, is if you go down all the way to the bottom of the screen, you see all the information right here. We're going to go to investors, and then this is the presentation we'll be walking through. So this is how you can go and do your own due diligence if you so choose. So as always, to get us kick-started, again, I'm showing an investor presentation for the 23andMe SPAC announcement. This occurred earlier this week. We are going to continue to watch this. Keep in mind that I'm just some guy on YouTube, and this is not meant to be financial advice. Please go do your own due diligence, and I am just reviewing this with my own experience. They've got the disclaimer in here that says a lot of that, and that I am not able to provide qualified opinions. So let's talk about their leadership team right here. Again, this is a company that has been around since 2006. They are not new. They have been in business for some time. The big change in the leadership team here, you're going to see Evan Level coming in as a chief information officer and the CFO. He has CFO experience coming from the Virgin Galactic side. So we're going to be seeing that company come in and be a big piece of this. Here is the investment thesis. Again, they're talking about disrupting the healthcare experience. This is something they have not done so far. They are looking to get into this field. Their second point right here of the genetic database, that is the capability there, and I get excited talking about it. That is what can make this company go insane. If you are capable of selling some idea of this data to a company like Pfizer, like AbbVie, some of these big pharmas, Merck, the capability to say this is a genetic database of millions of users would be huge for them, because it would give them the capability to go out and speed up a lot of the drug testing. So you can see a lot of the areas right here. Again, talking about some of the reasons why people like it. That is by and large the only reason, in my opinion, that this company could possibly be worth what they're asking right now, which is $3.5 billion. So let's dive in. And again, this is what they're collecting for. They're saying, hey, we are building all of this information. If you actually look at this, again, 10.7 million and growing larger. Huge genetic database. They're talking about, again, the healthcare system is dysfunctional. This is very similar to some of the other SPACs that we've looked at. Everyone's talking about this, but we're not really seeing any of it get changed yet. So it'll be interesting to see if this is, again, just kind of pointing it out or actually making a change. What I want to talk about, though, is, again, how are they making money? Retail DNA tests, they send it out, we get it back. Again, solid. This is the product. This is what they're selling today. This is who they are working with. This is why it is beneficial. So it again even shows, hey, if you have chronic kidney disease, if you have genetic mutations, this is important for consumers to know. This is a value add. It's like going to a doctor, getting a physical. It's important, but not a lot of people do it on an annual basis. If you had the capability to say, get this taken care of preemptively, imagine some of the expenses that can save you on the back end. If you're told, hey, your family is known for having kidney disease, and you go and get that taken care of beforehand, is a huge factor in a long-term growth as well as lack of future expenses. So there's a lot of important people here. Again, the big number that or person you're not going to see on any of these slides is Richard Branson is funding the push behind this. So let's talk about the company as a whole. As you can see, what we have here when they're projecting forward, right now there is 10.7 genotyped customers. They have their data. The fact that they're looking to expand that database by right at 50% over the next 3 years is a huge deal. This is what we need to be watching because, again, in my opinion, this right here is the $3.5 billion valuation, is they have the capability to have that data, and if they are able to monetize that data, that is going to be huge, or if they bring that research in-house, I think that's going to be even better for them. So let's keep going on here. Again, they're talking right here, hey, how do you make this? You have to opt in. How do you get all of that research to go to drug discoveries and consumer products? You can see that this is the approach they use, the ancestry composition. That's to get the foot in the door. The data, in my opinion, and I'm going to keep hammering this, is the fact that that data is going to be what makes them incredibly capable as a company. So this is what you're talking about. This is kind of the case study behind it, is yes, you have the capability to learn why you need to have this information allowed. This particular person did not know that she had risk in her prior family medical history, and so she was able to go and take proactive measures to be able to mitigate some of those risks. What I want to highlight is the fact that that is what most people do. You can see right here, again, a lot of customers are dumping their data in. They've got 7 million genotype customers at this point in time. So what we're talking about here, again, I'm just going to highlight the data is good. That's great. I think we get the idea here. Let's talk about the capabilities to monetize. So we've got just this past year, they started the subscribers. Right now, that's 75,000 subscribers. If they're opting in at the same price we just saw of $29 a month, then that's where you're starting to see some of that monetary build begin to happen. So if you're looking at $29 a month times 12, that means you have your subscribers right now are paying on average, we'll round up and say $350 per year. So right now, though, we have all of those subscribers of 75,000 right now. That's coming out to just north of $26 million a year. So if you have these people paying you $26 million a year, and you can capture some of that larger database to go after 10 to 11 to 12 million people, again, even if it's 20% of that, you're bringing in some serious revenue numbers. However, what we're looking at going forward is, yes, the capability to use this, but how does all of this help them actually make money? So we go down here, talk about drug development. Again, they add efficiencies because they have a much larger sample size. What I am going to look at is essentially, and I'm just going to continue scrolling through this so you can see it. Feel free to do your own research. What I'm looking at is how do they make this monetized? So they just had this collaboration with GSK. And so again, it says they're sharing the 50-50 on the cost and the profits. I would too, to get access to this company's data. They invested in, and again, this is something because they're losing money, they need these additional investors. But if they're able to use all of this data to present new info, such as different treatment techniques, different drugs, that's how they're going to make a lot of money. What I'm looking right here is not necessarily at this slide right here, although I think it's important, this is how they monetize, is actually going to be further along in the actual data side, where you see something like this, where we see what are our pipeline targets. You see this with Pfizer, you see this with Merck, you see this with AbbVie. You need to have targets in your pipeline that produce results. For each one of these that fail, you're going to be losing out on a lot of money, both from the lack of revenue you expected, as well as on the lack of the capability, or rather the cost of the R&D to go in. So let's talk about the financials. This is where I'm going to hone in on because this is what I understand. As you can see here, they're even highlighting, hey, this is how much it's going to cost us to get more customers, and this is how we expect to get more of them. So the thing that surprised me is look how much they spent in 2019, and we saw a very similar growth, I would say, to what we saw in 2018. So I'm wondering what's going to cause that additional growth in 2020, or what caused the additional growth in 2020 and 2021. So we need to be watching that, but that is the data. So that is what they can monetize. Right now, this is how they're bringing that money in. This is the expectation going forward. So right here, it says this is the profitability expectation going forward on the consumer and research services. As you can see right here, gross margins, I'm going to showcase down here right now, 44%. And it goes all the way up. The expectation is within the next 3 years that gross margin is going to be 58%. So the big issue I have with this is we see huge increases in revenue number. We see huge gross margin, and they're not making money in 2021, the year that they're getting ready to bring in nearly 3.5. They're going to be a $3.5 billion company. They're bringing in $800 million outside of an equity investment of $300 million last year, and you're still not profitable. Why is that? Why are you not making money when you're making hand over fist gross margins? These are software margins right here. Microsoft makes 40%. NVIDIA makes 50%. You're making that at the same as some of the largest tech companies, and you're still not profitable. That is an issue for me. That's what I need answers for, and I'm not finding that in here. Again, kits are selling. Subscribers are growing. The subscribers I just showed you, with just the 75,000, they should pull in $26 million this year. I don't see those numbers represented here going forward. Again, revenue from 2019 and 2020 are a lot higher than we expect for 2021, 2022. So I'm wondering, where is that money going, especially when you see this growth here. This is revenue numbers. This is not the profitability numbers. So if all of this is increasing, where's that money going? Let's look at the financials. This is where supposedly this is going to be taking away the money. So my question for the adjusted EBITDA, so this is again earnings before tax and interest, where is all of this money going? And this is why I personally am not going to be investing in the 23andMe SPAC. I see a lot of representation of a very similar opportunity that we saw in space, or Virgin Galactic, where the only way this company takes off is based on hype, but there's a lot of pitfalls. So let me paint this picture for you. Right now, 3 years from now, the company says that they're expecting to bring in $400 million at a 58% profit margin. That is one of the highest profit margins I have ever seen. So that means that out of that $400 million, they're expecting to have $232 million in free cash. That means that for their consumer and research services, adjusted earnings before, so all the pro right there, they're expecting $71 million in profit. However, their adjusted EBITDA is $78 million. So I really need to see where all the R&D is going for this company. Why are they not profitable? Why are they burning through all this cash when they're making money hand over fist? And I have not seen those numbers yet. All of that gives me concern that this company is saying that they are worth $3.5 billion. Right now they're talking about they expect to receive $509 million in cash. However, $509 million in cash, if we go back up here, they're going to burn through that. So fiscal year 2021 through 2024, you're seeing decreasing cash, decreasing cash, decreasing cash, decreasing cash. So that's 500. So right here over the next 5 years, not counting any prior year losses, this 106 to that's 240, 350, and right at 430 or 440 of lost money, of cash over the next 4 years. That erases this investment right here of $509 million The $250 million of committed pipe means that they're going to be issuing more shares. One thing that people are going to be talking about is the fact that Sir Richard Branson and Anne, I'm not going to try and pronounce that last name, are investing $25 million each. I have zero cares about that statement. And again, this is I recognize a unpopular opinion, but Richard Branson is going to be like a 10% owner of this company, of a $3.5 billion company. And you think I care if he's investing $25 million? That'd be like if I took my money out of my wallet and then put it in my front pocket. I don't have a lot of high expectations associated with it. The other thing that we're going to see is, again, that management and current shareholders are going to maintain 81% pro forma ownership. This is both a good and a bad thing. The good thing here is I like when management takes ownership of the company because it shows that they have a vested interest in the company. However, what I anticipate is going to happen is they are going to continuously issue more shares. They are going to have stock options to purchase additional shares at a much lower price than the average investor is going to be able to get in at. So as those shares get issued to take care of the fact this company is not making money over the next 3 years, you're going to continuously dilute those shares. So this is what you're going to see. You're going to see all this money going on, this happening, and then out of the money coming in, 63 is going towards transaction cost, which just so happened to be ran by Virgin Galactic, who, again, if you recall, is owned by Richard Branson. So here's some of that 63 million or some of that 25 million going in. He's going to recoup that pretty quick. Again, huge shareholder for VGAC shareholder, huge shareholder for the VGAC sponsor, considering he is one. So he's getting 2% of that. All this being said, because I'm coming across very negative associated with this company, I have a big issue with companies that are losing this much money because they're going to issue more shares and dilute the power of the shareholders. You're seeing this continuously with Space, who is also owned, or Virgin Galactic, SPCE, which is also owned by Richard Branson, where they continuously take advantage of the hype for the company, even though the company is not actually making them any money, and the shareholders are the one who are buying into it. That being said, there's still a lot of people making money, and that can be beneficial, but you have to know that the company is still not making any, and you technically aren't until you sell out. So this is, again, the big approach here. The big thing, in my opinion, is that data platform. And if they're able to monetize that using therapeutics, that's huge. So here's, again, just the last slide showcasing that they've lost money, a significant amount the past 2 years. So my personal opinion, just to re-highlight this, I'm not going to be investing in this company. I think that they have a huge capability. And maybe once I have access to the SEC financials when that merger closes and I can see where all this cash is going, how they're losing money when they have a 50% gross margin. Once I can see that, maybe my opinion will change. But right now, I just can't understand the fact that you have a company that's it's projecting to lose $500 million over the next 4 years. So this is the video. If you want to see my commentary, then please join our Discord. We talk about these stocks and videos all the time. And if you have any feedback, please drop those in the comments below. Feel free to criticize my position or say that you love Richard Branson. I won't be offended, but it is just not for me right now. And if you found this content helpful, please leave a like and subscribe. I'd appreciate the support. So thank you. Have a wonderful rest of your day, and I will talk to you all later. Thanks.